Hello and welcome to another update video about Solana. We're still exploring the idea that we could be breaking out directly from here and put a fifth wave in place. That would not necessarily mean that the bear market is over, but as I explained in previous videos, it will take a while until we can confirm the bear market is over. At least we need to see a move above $20. That would at least be an evidence that short-term corrective patterns, which would only lead to short-term upside and just indicate a larger bounce in a larger uptrend, they will get unlikely above $20. So $20 is the first step that the bulls would need to take in order for me to really consider more closely that the low is in. I mean, we wanna see evidence here. Yeah, I mean, you can anytime you can say, oh, I think the bear market is over, I think the bear market is over, but it just sets a lot of people up for failure. I know how easy it is to just get too bullish when we see a few green candles, but in the past, you know, evidence just shows oftentimes, especially if the daily trend hasn't shifted yet, yes, that is the first signal that something could happen, but it's not the evidence. And we want to stay objective on this channel, so as long as the daily chart trend is down, which it clearly is if you zoom out, you know, we cannot confirm that the to go to the daily chart, that the bear market low is in. However, we can explore the idea, and therefore I give you a step-by-step approach how you can sort of identify that and what are the things that need to take place in order to confirm that step by step. Because it starts on the lower time frames, that is when those impulsive moves to the upside build, when sentiment shifts to the upside, and we're going to track it, and we're going to look at, do we hold critical support levels? What are the key thresholds? What are the pivot points that the price needs to reach to the upside in order to confirm, yes, a low is in? And then as those patterns build, we can confirm that with higher and higher likelihood. At the moment, all we've seen, in all objectivity, we've only seen 3 waves up, ABC. I gave you here this yellow box as a support area for a potential retracement, and we reached that target area. So it's not only a support area, it's also a target area that we should have reached anyway in either a breakdown scenario from here or a scenario in which we would make one more wave up, because here we reached all requirements for these 3 waves, A, B, C. And this could turn into a 5-wave move, which would be a very first indication that a bear market low could be in. Because then we would make here our 4th wave. So we would have made 1, 2, 3. This would be the 4th, which would normally go into this yellow support area, and then we could get a 5th wave out of that. After the 5th wave, after these 5 waves, however, we would expect then a 3-wave move down. That would be an additional confirmation if we make a higher low here. And then if we then make 5 further waves up, it would be additional confirmation that a low is in. And then again, we're waiting for 3 waves down. We'll define a target area. All of these are tradable target areas, yeah? And then we can look at 5 more waves up. So we take it level by level here, you know? However, I would advise against getting too excited. Yeah, emotions are never good. And I see it often in the comments when people get emotional about these movements, which is obviously wrong and just sets you up for failure in the crypto space. There is, first of all, no reason to FOMO, because if this is the low of the bear market, we should all be incredibly happy, because then we have probably a whatever 20, 30, 50x maybe in front of us. Yeah, so there is plenty of time to get on board, and there will be plenty of retracements and pullbacks along the way. It's obviously not a good idea to get in the all-time high territory, which a lot of people will do because they will wait so long that the train has left the station. But there will be plenty of stops along the way that we can safely enter, and the train hasn't gone too far yet, right? So that's, I think, the idea, to get on board as soon as possible while not risking large positions, while we could still fail with a high probability, but getting in early enough to really take profit or benefit from most of the journey. So hopefully that makes sense. Okay, we have here the potential to put that 5th wave in place. We are currently pulling back in this ABC correction. Don't have great visibility of what this could be because I have an ABC down The C wave wasn't really long enough. However, minimum requirements have been fulfilled because it moved below the low of the A wave, but we haven't really managed to get off the ground here. What I have put onto the chart here is this descending wedge. A breakout of the wedge would be a first indication the low is in here in this possible fourth wave, which would lead to a fifth. But there is no evidence yet. Yes, we've now made a higher low, but also a lower high. So it's not evidence yet. What first piece of evidence would be if we break now above the descending wedge. That's now possible that the low is in because minimum requirements have been fulfilled by coming down in a three-wave move, by hitting our target area and by reacting to it. But now we need to see a higher high as well, breaking out, ideally retesting it. That would be great. So getting up, retesting as a sign of strength, looking at a bullish engulfing candle or something, breaking above this high, breaking above the B wave high would be more confirmation, breaking above the wave 5 high here even more, and then we can move up from there. What would be a target for such a possible fifth wave? So we can calculate it as well. How do we do that? We do that by taking the length of the third wave, which is all of this distance, and adding it to the low of the fourth, possible low of the fourth, and it would take us into the range between $16, that is the 61.8% extension. Yeah, that's the first target. Resistance is already $15, so we might just get there and bounce back, but the more ideal target would be $16. There's another way how we can do that. In this way, we take the length of the wave 1 and add it to the low of the fourth, and here it takes us to 1561. That's just below the previous target that we calculated, and 1737. So somewhere in that range we should get into in a fifth wave. That would purely add confidence that we are on a more bullish track here, which doesn't mean if we get those 5 waves the bear market low is in. No, the daily trend will still clearly be down. We would need to reach $20 at least, because all of this, bear in mind, even in a corrective structure to the upside, you get impulses. You get basically, what you get sometimes is a larger A, B, C, where the A wave of a corrective pattern could be an impulse, the B wave will be a correction, and the C wave will be another impulse. However, it will be an impulse in a correction. So just be aware of that. These can overshoot at times. I mean, we are in the crypto market. Nobody should be surprised if targets sometimes are exceeded and the prices are moving a little bit stronger. Those crazy moves are possible, especially in the crypto market, because it just is a very volatile space. But yeah, that's my view about Solana. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.